Share Shootout, brought to you by Lion of Africa Insurance, insuring South Africa's future.
It's unrelenting, it's mean and simply backbiting. It's Share Shootout League right here on CNBC Africa, first in business worldwide. I'm Bruce Whitfield. Now, is it true that COSATU expelled NUMSA because Irvin Jim called COSATU the lead Labour broker for ANC policies? Now, as the High Court has dismissed the SABC boss's case, could Ellen Chabalala, now just for once, please, Ellen, Ms. Chabalala, Madam Chairman, just volunteer the qualification? You've got it hidden some... No, maybe not. We don't know. And will the man who's known as South Africa's #1 and proud owner of Humble and Kantlaville please just show face? We're playing Where's Wally tonight on Share Shootout League. We don't know the answers to any of the provocative questions, of course. What we do know is that the league is already fast running out of matches. Just take a look at what happened on the Twitter streams regarding the match between Maverick and The One. For once, The One got some friends, and they voted for him. Neo Khansi is now on 6 points, and he is off the bottom of the league, and hopefully he ends the campaign with some dignity intact. We're a little bit worried about Chi-Town at the bottom, but he is from America, so do we really have to worry about him at all? Well done to The One's friends for finally learning how to use Twitter and to support their good friend. Unfortunately for the independent and astute retail analyst, the Maverick, the slog didn't yield much, and now he is tied on 6 points with The One. So you've seen the big league tables, of course, and you will decide who wins today's match and ultimately who will run away as victor of the Share Shootout League. All you've got to do is follow at SSO League and you tweet any of the stock pickers hashtags. It's as easy as proving your qualifications. That simple. Back to the match in hand. There's a 6-point gap between our first and second stock picker on the log. There's also one is first and the other is fifth. I give you Mr. and Mr. Smith, but it's not like that.
Nic Norman-Smith, Chief Investment Officer of Lentus Asset Management. I follow a value investing approach here at Lentus. We generally are quite contrarian, so looking for areas of the market that people are really hate and are nervous of, and that's where we believe we can find the opportunities. I think it's about finding some stocks that the audience really like, exciting, and try and spice things up a bit and not just have the boring old favourites. I think Bruce Whitfield is definitely going to be the biggest troublemaker on the show. Yeah, absolutely, one must be positive. I think it's going to be a tough competition, so for sure.
My name is Clive, Ramathibela-Smith. My investment philosophy is keeping to the fundamentals of investing, so keeping it simple and straightforward. Stick to the basics and make sure that you create phenomenal traction from that. My game plan for the league is to make fun of everybody else and make sure that they get embarrassed at the end of the show so that I can win simply because I get public preference. My biggest competition in the show, and it has nothing to do with investment philosophy at all, it would be Gary, simply because he's tall and big and I'm terrified of him. I don't stand a chance. I'm going to win the league because I feel that I've got the right criteria and the right material to make sure that I win the league. I qualify better on the BEE scorecard, so I hope that will help.
So tonight we got one Mr. Smith against another Mr. Smith, and we all saw the movie Mr. and Mrs. Smith, and that ended in a big mess, didn't it? So it's Clive Ramathibela-Smith, who is K-Live from Clive Inc., and Nic Norman-Smith. What is it about these Smiths who have to have a middle name just to make Smith sound more posh? He's the value guy from Lentus Asset Management. He's not doing too badly, and nor is Clive, but they do have to get your votes to come out as champs. First, the house rules, they've pre-picked 3 shares. Only I know on my little screen in front of me what they hold. They've each got to accept at least one of their competitors' picks. They've each got 30 seconds to explain their picks, blah, blah, etc. From the local exchange, from an international exchange, an offshore allowance. You know all of the rules already. Which of you Smiths wants to go first?
I'll go first.
There we go. The brave Mr. Smith. Okay, versus the cowardly Mr. Smith. Okay, Clive Ramathibela-Smith. I like this one. It's an interesting one. It's one of the least exciting financial stocks on the JSE, but perhaps that is one of its strong points. Which one am I talking about?
Oh, I don't want to steal his thunder.
Which one do you think would be? If I'm talking about the least exciting financial share on the JSE, which one would you choose?
Yeah, I think I'll just get myself in trouble.
Go on, just identify a boring financial services company.
All banks are boring.
All banks are boring. Yeah. Small bank, quite dull.
On
Sasfin,
highway.
but that's not
Sasfin, there we go, in 30 seconds. You see, he read your mind.
Perfect. Love the news structure. So I just saw the numbers come out this time around. They're up by 12% year on year, heads up line. The ownership from the ITC is very, very crucial to Sasfin's diversification, and they're going into the different financial sectors which are very, very necessary in them actually becoming a formidable bank. The highest capital adequacy ratio of a bank, of a small private bank in South Africa, which is fantastic, and they're always attracting new business. So this, for me, is a stock that you want to go. At 22 rands per share at the moment, I think they're very attractive.
There we go. You said it's not boring. How is it not boring?
Oh, some smart people in there.
Yeah, I'm not being rude about the people, but like, it just doesn't ever seem, it's in the most exciting space. It serves entrepreneurs. It should be whiz, bang, pop and excitement, yet one kind of gets a feeling that it's kind of very
which is great.
Which is fine for an investment, I suppose, but not much fun to watch.
I mean, I quite like it. You know, it's small and nimble, so it can move quicker and perhaps take opportunities that some of its bigger competitors can't.
But does it?
Well, you know, Bruce, the thing is that 10 times earnings, it doesn't have to do anything majorly exciting to get a decent return. So if it does something smart, great. It's got decent capital adequacy, so hopefully it's not about to fall over.
The capital adequacy is important here because as a small bank, it's got to show that it has plenty of capital. It's got to carry extra capital. Doesn't that tie up the capital, make it lazy? For most banks, you say, we'll give it capital adequacy of 10 or 12% and we'll have the rest as shareholders if you don't apply it. In Sasfin, they've got to keep that capital up as a sort of almost a guarantee for investors.
But you know, that's actually fine because what you find, banks are great businesses, they make a lot of money. But what happens is every now and then, we see a big boom cycle and the banks take on too much risk and they blow themselves up and investors get hurt. So actually, quite frankly, just like in any investing, if you've got a company that's just boring and plods along like that, it's going to get you much better returns than the days of boom and bust. And
what I like about it is a dividend yield of 4%. And that's got to be what's very attractive about this.
Very, very attractive. And this got this nice business, rental business, it's called Sandral. They took it over about 6-7 years ago. This thing is pumping close to about 28 million per annum without fail because they rent out, you know, office equipment, office stationery, and it's just growing and growing. It's unbelievable. And I love the lady that runs that business as well. So
there we go. I see there is a vested interest in this. Okay, fine. She told him he had to pick it. Will you accept it? Are you compromised as well, like this, Nic Norman-Smith?
I'm independent, but I'll accept it. No, I think it's a nice, solid little business, and you know, on a market that has very few opportunities at the moment. Looks like a decent one.
Okay, so he'll take it, Clive Ramathibela-Smith. Awesome. You can go home safely tonight. All right, Nic Norman-Smith, the other Mr. Smith from Lentus Asset Management. You're going global. You're going into the glug part of the market. And I'm not talking about going down. I'm talking about going up. Oil prices under a huge amount of pressure. Brent crude, $80-ish a barrel. Why do you like BP in 30 seconds?
So we all know about the company. There's so much bad news that it's priced really attractively. So the Deepwater Horizon spill from a few years ago, legal liabilities, it's got a stake in Russia. Russia's under pressure, the oil price is under pressure, and that means you can buy what's a great business at book value. Just if you look at the valuation, the market's pricing their oil reserves at around $12 a barrel, which is over 50% cheaper than the rest of its peers. So yes, there's some nuances in the cost of getting those barrels out, but quite frankly, what's happened is the market has sold off this business much more than
30 seconds
peers.
Are up. Clive, you've got to like BP.
It's very difficult not to like BP, but I'm worried about these things, that the fact that they're so reliant on what happens in the oil price. That's the first thing. Second thing, did you hear those Saudi Arabians? They are so very tricky, those guys. I don't understand what they were thinking. But here they go, and then they say, oh, well, we're not going to discount you, but we'll choose this particular side of them. When is it that they're going to actually change that and say, right, now we're going to get you? Because obviously, right now as we speak, China is overtaking America when it comes to oil demand. So I'm worried that that particular sector, how stable will BP be?
But if their oil reserves are being priced at $12 a barrel, even if it costs them more than their peers to take it out of the ground or suck it out from the bottom of the ocean, and even if they spill a bit as they've been prone to do in the past, the price is right for this asset.
Absolutely, you're spot on. But it is too currency dependent for me to actually put any value into it.
Okay, too currency dependent, Nic Norman-Smith?
Yeah, what from a rand dollar? I mean, the rand is a little bit too weak, but yeah, over time it's not massively weak, so I don't think that's a huge issue. Obviously the oil price is down substantially, and we're already seeing a lot of producers going out there saying we're cutting our spend, we're not going to explore some more. So just like they say the cure for high prices are high prices, well the cure for low prices is low prices as well. And we've got OPEC, which yes, they may not be doing perfectly, but there is a bit of control, so it's unlike an iron ore or some of these other commodities. It's trading at around about the marginal cost of production, so there is a fundamental flaw in the oil prices. So if you're worried about a business that's so dependent on the oil price, buy when the oil price is low, and the oil price is low at the moment.
There we go, Clive.
Interesting concept.
But you're shooting it down.
I am indeed.
You were shooting it down. He's not playing as nice as you are, Nic Norman-Smith. Clive Ramathibela-Smith. Too many Smiths in the room. Let us go here to an insurance play. This is an interesting one. Do you know anybody who works in this particular insurance company that's got a hold on you?
Meneer Kruger.
Meneer Kruger. No, because he does come from your past, doesn't he? He's one of your mentors.
There you go.
There we go. So you back the horse you know in this particular
No, I'm
case.
actually not. I'm gone short.
You've gone short? Oh my goodness gracious me!
I have.
You are like the pupil who's biting the teacher.
I'm hoping he's not watching the show.
I'm going to phone him in the ad break so that he can watch a replay over the weekend. You're shorting your mentor. You mean, callous and heartless guy. I can't wait. MMI Holdings in 30 seconds.
The saturation point that they've reached is quite phenomenal, and they're losing business left, right and centre because they don't have competitive pricing, and that concerns me because what it does is means that even the consumer right now currently going under pressure is pulling out. The first thing that a consumer does, Bruce, when they get some pressure is pull out on the policies. So that's what we're starting to see as a trend. And if you look at what's happened over the last 6 months, that's exactly what's happened, and Sanlam reported on that as well. So I'm worried that in the short term they're not going to be necessarily doing great, and that might just bring them down.
Okay, there we go. Master turning on the teacher. The pupil turning on the teacher, I beg your pardon. Is this double standard? Because, I mean, Nicolas Creer taught Clive Ramathibela-Smith everything he knows. He grew up on the knee of Nicolas Creer in a professional way.
I think Karma's going to come back to you.
Would you short any insurer at the moment? I just look at the rate of sales growth that all of these insurers have been reporting for the last 18 months to 2 years, and it seemed too good to be true. But is it really a time to be shorting them?
Look, I'd be wary of shorting it. You know, broadly these businesses are sort of aligned with markets, and obviously markets have gone up strongly, so I wouldn't be buying it, but I'd be a bit wary of going short. The reality is markets go up over time and you can get really burnt shorting. So not one to buy. I do think I think most of the gains have been made, but insurance companies are great businesses. You get to take Bruce's premiums today, invest them for free for many years, and only pay them out later. So provided you get that right,
and if Bruce lives long enough, the policy expires, you never have to pay it out, and you get all this free premium income up until the expiry date.
It's a brilliant concept.
It's a wonderful concept. We should all go into insurance. Some of the world's greatest fortunes have been built off the back of insurance businesses. I mean, you look at Doe Steyn, for example, the short-term game. You look at Warren Buffett owning insurance companies. They are cash cows. But markets are toppish. You're nervous about markets. You're worried about sales. You're worried about their ability to price more effectively.
Exactly.
And they are the most vulnerable in your book.
Yeah, I mean, they took on Metropolitan and the merger. I don't think that worked well because you saw some job cuts as well after that, you know, and applying their management elsewhere, where I don't think they had an idea what this body would look like after the merger. So I'm very concerned that, you know, they have not priced in things accordingly, because Metropolitan was known as a cheap type of insurer. Now all of a sudden they have to meet up because they're a listed entity with the MMIGroup, so they have to actually restructure everything.
If you want to buy, I mean, you can go and buy AIG at 0.7 times book value.
Yeah.
So there are a lot cheaper insurers out there. Look, I wouldn't be shorting it. So I won't accept it.
You'll shoot down his shorts.
Yeah.
It's a terrible image. Okay. Now, you do say that shorting is a very dangerous game to play because you're taking a bet that prices will come down within a fixed period of time.
Unless the business is fundamentally broken.
Unless it is. But even if a business was, hypothetically speaking, fundamentally broken and has seen its share price go up 4 times in 12 months, even though the business is fundamentally broken, you'd have to be some kind of idiot to vote against, forgive the term, the momentum in a share. But that's precisely what you're doing with Telkom. In 30 seconds, tell me why you dislike it so much that you want to short it.
Okay, we all know why the voice side of the business is dead, and the real opportunity they had here was they've got a lot of cable on the ground. They could have become the de facto broadband provider in the country. that opportunity's gone by. They've lost it. We've now got private companies from Stellenbosch digging up pavements in Parkhurst to provide fibre. We've got Vodacom rolling out 150,000 fibre connections in the last while. So now you've got a badly run business with government interference, which has got really no core business left, and it's being leapfrogged in the one area that it could possibly have made some money. And the share price is up, as you say, a few %. So it doesn't all make sense to me.
There we go. I've seen it trade between 50 and 60 bucks. Recently, Clive, it's broken out of a trading range of between 50 and 60 and has gone north of 60 rand, which suggests that not everybody is as grumpy as Mr. Norman-Smith.
When the stock's gone up that much, people love to start buying it. No one wanted it at 20.
Nobody wanted it at 20, but at 60 they want it and they continue to buy it. Do you vote against the momentum in Telkom, or do you accept the other Smith short?
I think it was in this show where you and I had a bet about what Telkom's going to do, and I did say it will break the 60. In a very short period of time, they've just done that. I am not saying that it's not saturated. I mean, it's going up very much in the momentum, but why would you want to short something that is doing relatively well? I don't understand that. So
But because the business is fundamentally compromised. I was speaking to an MTN guy the other day who says, we're rolling out fibre. Vodacom's not the only guy. You look at the guys from Stellenbosch who are digging up Joburg pavements, and they are laying down the cable. The stuff that Telkom should have been doing in the last 15 years, creating the skeleton of communications underneath the soil of South Africa, and they spent 15 years fighting.
They've battled in a monopoly. It's now cutthroat competition, and I can promise you, as much as people hate the cellular networks, they hate Telkom more. So any opportunity to leave them, they will leave. I mean, I've chatted to people in my neighborhood. People would pay a premium to go with Vuma, the new one, than they would to go with Telkom, just because they want to get them out of their lives, and it's quite true.
What about the fixed line story? I mean, that's still...
What fixed line story?
I'm serious, it's still happening. I mean, we just open new offices. You need Telkom to come and help you. There's nobody there in the market who's actually competitive. Unless you're going to go with Vox, but anyway, that's...
You could go with Vox.
As the broadband comes out, you can get voice over IP, and it's getting a lot better. And plus, yes, there's some money to be made from the fixed line. If you streamlined it and you fired a whole lot of people and you made it run like a proper business, they're not allowed to fire people.
Yeah.
So that's because it's got government behind them. So why would you worry?
That's the point.
Exactly. So that's another point. Government want to get broadband and infrastructure out to the masses without a profit incentive, and we know what happens with government-run infrastructure.
SAA's got government behind them. The SABC's got government behind them. Eskom's got government behind them too.
Behind the winds.
Yes, okay. But it's a foul wind that blows. Nobody.
And by the way, they've got a mobile business which is hemorrhaging cash.
Oh yes, they have got a mobile business. Why does nobody ever talk about that?
Oh yes, it's so small, and scale is what you need in mobile. So to come in, as much as Cell C's up until recently had quite a good little brand position, it's very tough to compete against the big guys.
A vigorous short, I'm in love with Telkom.
I love Telkom momentum.
Oh my goodness gracious me. I think you're going to lose the show tonight, just on that one comment.
Just on one, okay.
Okay, but you're not shorting Telkom. You would actually buy Telkom at 61 bucks?
Well, I've bought Telkoms already, so I'm enjoying the momentum at the moment. So
well, would you add to your portfolio, or would you hold?
I'd hold.
There we go. You're shooting down your shorts, I'm afraid. So we shot down the shorts on that particular front as well. So what we've seen from Clive Ramathibela-Smith from Clavera Inc. is Sasfin and MMI. He's gone short on MMI, despite the fact that Nicolas Creer taught him everything he knows. Very disloyal. Nic Norman-Smith accepted Sasfin. He likes the dullness of it. MMIGroup, a short on that, he shot it down. As far as Nic Norman-Smith from Lentus Asset Management, who's picked BP and a short on Telkom, both of those have been shot down, which makes us into this next round go into a very interesting space, because the one Smith is going to have to accept the other Smith's pick, and the other Smith can reject Mr. Smith's pick. Can you separate the Smiths? Will it be Mr. Smith or will it be Mr. Smith? We prefer the answer in black and white. We'll take to Twitter and use the hashtag. We'll see you in a minute. This is CNBC Africa. You're watching the Share Shootout League, the only league in the world that can be changed by its viewers, and that is you. This is match day number 30. We're edging closer and closer to the final four. Only your votes can change the look of the league. What you do is you follow at SSO League and you vote for either Clive, who is Mr. Smith in the suit, or you vote for Value Guy, who is the other Mr. Smith in a suit. Let's see what they've done so far this evening. Clive, Ramathibela-Smith from Clevera Inc., Sasfin and a short on MMIGroup. The other Mr. Smith accepted Sasfin, shot down the short on MMI. Nic Norman-Smith's 2 picks of going long on BP and short on Telkom have both been shot down, which makes the game more interesting as we go into the final stretch, because you're going to have to accept his last pick, Clive. Now, usually on the game, the person goes first in the first round goes second in the first round, but because I want to make you sweat a little bit more, I'm going to make you go first this round as well, just for the hell of it. This is an interesting company, newly listed in the United States, Chinese internet company. Just last week, we saw what they call Singles Day, and Alibaba moved how many $1 billion worth of stuff? 250 million individual shipments, 50,000 motor cars were sold online in a single day. These people are crazy.
Nuts.
You have to be that to invest in it. If you want to, give me a view as to why Alibaba is on your buy screen.
These guys' IPO starts, and now already they're 40% more than where they started. Started at about $64 per share, now it's sitting at 99. And what's happening is the momentum is not stopping. And what's taking place now at the current moment is that they're going into other parts of Asia, which is quite phenomenal. And their choice of where to list was quite interesting one as well, I found, because that's where the most volumes have been in the last couple of years. So this particular baby, I love Mr. Jack. I think he's a brilliant mindset, and I think the diversity of the business makes it quite unique.
Okay, there we go. Alibaba is one that you will take.
Tell you why they're listed in the States, because Hong Kong had too many onerous restrictions on it.
No, but I mean, this is hyped. It's loved. It's adored. It is driven hard. It is running hard. It has got such a great story to tell. You've got to like it.
It's a phenomenal business. It really is. So it doesn't, you know, people say, oh, it sold so much. All it is a platform, okay? So it holds no stock. So it has no costs for that. So all it does is it takes...
It's Amazon.com without the hassle.
Yeah, well, it's actually a mixture of Amazon and Google because, as I say, it doesn't hold the stock. It sells Google-like advertising, and the platform's so big that the network effect is massive. So it's a phenomenal business. It's not some rubbish pie-in-the-sky internet stock. This is a real business. Unfortunately, I think it made
just because everyone else loves it.
It made $4 billion last year, and it's at a market cap of north of 200 billion. So it's on a phenomenally expensive valuation. Interestingly, we actually own it via Yahoo, because you can buy Yahoo, and you essentially get paid. You virtually get the entire Yahoo business, which is valued at over $12 billion, and Yahoo Japan at another sort of 7 or 8 for nothing, because they hate that part of the business so much. So there's a much better entry point. And I think to buy it sort of naked or directly, it's just too expensive at this point. If you buy Yahoo, you've still got the core Yahoo business there, if this valuation does appear to be a little bit stretched, which I think it is.
I think they'll bar them. I think Yahoo will be sunk into Alibaba eventually.
Which is fine, because then Alibaba will pay a premium for Yahoo. So shouldn't you rather own Yahoo than Alibaba?
I don't know. You go for the bigger one and start with the momentum and enjoy that, rather, you know, and keep going at it. What's happening is that the projections show that this particular business by 2017, in 3 years' time, will quadruple. I don't know.
What were projections suggesting of the IT sector in 1997?
I have no clue, because I don't think I was even out of high school.
Then.
I read a great article by Jim Cramer in the early 2000s. You should Google it and look it up. It's phenomenal. He got everything absolutely, terribly, completely wrong, as anyone did in the early 2000s.
I take it you're shooting down Alibaba then. You're shooting down Alibaba then? And
I am, unfortunately.
There we go. A quick one. I'm going to give you 30 seconds to tell me why you love Glencore so much. It's on your buy list. 30 seconds.
Great management ownership. They own over 25% of the company, so your interests are aligned, unlike a lot of the other professional managers. A third of it is trading, which is a little bit more... a little bit less exposed to the commodity cycle, but they'll still get hurt. No iron ore exposure, which is a big concern for me, for some of the other companies. And probably the most astute deal maker in the industry at a time when the industry is in turmoil and there's some deals out there. So they can really make a lot of money. And reasonable valuation. CapEx has come down. You can start milking the assets now.
There's a lot to love about Glencore, and you're going to have to love it.
And the ex-manager who went left and had $33 million with him. But anyway, that's besides the point.
Yes.
But
30 seconds.
Look, it is a good business. I have come to the show to defend it, and I'm defending it again, and I do accept it. Not because of just the diversification of the particular. I think the merger worked in their favour more than anything else, and they could continue to build numbers. And the PE now, I think it's sitting about 20, 25, so which is quite reasonable. So.
Okay. So the global resources cycle doesn't scare you enough to say no to Glencore?
No, I think they're quite a sustainable business, and they'll diversify. They're able to adapt to the new norms, so they're very well managed.
Glencore is accepted, and at that point we will leave it. Clive is hoping to secure one of those top 4 spots. Value Guy doesn't have a worry in the world. So if you want to be a pal, help Clive. If you want to be realistic, help. No, that's me. I will not prejudge. If it's a tweet or a retweet, as long as it's a hashtag, we will count the hashtags until Sunday midnight. Please use their hashtags. Don't just say, oh, I like Mr. Smith, because then we give each a vote, and that kind of defeats the purpose. So what you do is you follow at SSO League, and you change this league. The power is in your hands. We'll be back on Tuesday with match day number 31 already, between the newlywed running dog, if he's got any energy left, and the long-wed Scott, as they make the charge for Nick's position number 1 on the log. That's till next Tuesday, 8:30, right here on CNBC Africa. Till next time, do stay cunning. Good night.